We're here today on November 11th, 2020 with a Forex analysis for you with a US dollar JPY buy signal that was triggered just a couple days ago. Before we get into that, we want to pull up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And we're going to be talking about a high probable Japanese candlestick patterns, which by the way is the name of a book. Once again, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in Kindle and paperback version. Through it, you can utilize the best buy and sell patterns used for over 400 years to capitalize in all different kinds of markets, especially the Forex markets. With that, let's go to our live action webpage here at Forex-Trading-Unlocked.com. We have a yen chart here. Now, if you'll notice this purple line that is coming right across the middle right here, this is a key directional pivot that we are buffering right up against. Now, this market's been in the bear market for a while, and like the Swiss, the US dollar, Japanese yen, like a balloon underwater on Monday, came up and just exploded to the upside. Both of them had similar volatility, whereas most of the major currencies where they fell against the dollar, the yen and the Swiss, they really just crushed it, or they got crushed by the dollar. Now you can see that this buy signal here with just off of this low that it set, it took out 1, 2, 3 days of trading all in one day, and now it's been hovering right there. So our upside target zone, we've already come into it. We fell just shy rather of where we want to hit as far as our target, which would be this 105.75 area, and then this 106.12 area. This is a key pivot above here. This means that we will have made a lower move low and a higher move high, taking the US dollar yen off that major long-term bearish trend to a short-term neutral to happen, obviously. But right now this market is ripe for continued challenge of resistance. I think as far as the upside targets, it's very likely that over the next month or so we can see a challenge of 106.54. This 107.30 area up here, that's going to be rough. Now, one of the things I think that we have here with this US dollar yen trade, besides the fact that we have divergence in the currency crosses where they're all not just being bears or bulls simultaneously against the dollar, the yen, there's a lot of fundamental and technical reasons why it would continue to go higher. One, the BOE and Japan are looking to keep the yen from gaining so much strength against the dollar, especially right now in the wake of past lockdowns for the coronavirus and now new ones being imposed. As the dollar, remember, as the US dollar falls, that means US exports become cheaper. The rest of the world buys our goods, and US imports from other countries become more expensive. Japan being one of our biggest suppliers, that does not bode well for them. And remember that Japan, unlike China, they don't have a currency that they just basically fix the rate and just say it's worth whatever it is. They have a free-floating currency that is in the real mix with the rest of us in the real world. So the BOE, excuse me, not the BOE, the BOJ, Bank of Japan, definitely has its policy. They're trying to keep inflation low. Interest rates are obviously staying low, but they are doing, I would say, for the most part, they're probably one of the biggest buyers going on with this trade, just because I think they're putting a line in the sand. Because you got to remember, folks, as the US dollar yen, if it continues to deteriorate the way it is and the Japanese yen becomes strong, that means that Japanese companies all of a sudden are no longer exporting as much or making as much money off of their goods as they would like to, which means that then it puts stress on the Nikkei. So a weak dollar yen is negative for Japan. It's a double-edged sword. It goes both ways in a lot of different fundamentals, but long-term wise, that is a big deal, especially when you're looking at a situation where we're in right now with the coronavirus lock. Key levels here is this 103.17 area that we rallied off of a couple days ago. So that's a big wage. You got to come back down there before we really get bearish. The reason I say that is, as we were coming through here, we came down, we fell off this high back in the early October. We made this low just a couple weeks ago on October 29th. We rallied up to on election day, just after that, November 4th, came up here. We made a lower move high after a lower move low, made this lower move low, and then whammo, in one day we took out this lower move high and this lower move low. This is a key signal day here, this bullish engulfing line. Now, a bullish engulfing line is when it encompasses the whole body of the previous day. Not hard to do when you consider the length of this body here. If you really want to learn the true mechanics of how that signal works and how to set up your targets, you have to read the book, High Probable Japanese Candlestick Patterns. However, what we're telling you right now is the pattern is on, the trade is on, and we've already actually come close to our target. So we'll see how things are going with this. I don't think you're going to see this kind of volatility to the upside continue on very many days, but it's not unlikely that we will see this market kind of go sideways for a couple more sessions and then spike up into this area, take a breach of this 105.75 pivot area, and that's a key directional pivot. There's multiple reasons why this is here. It goes back on the chart. It goes to weekly and monthly charts as well as daily charts from a long time back. So all I could say is that this is a key pivot, and especially since we're hovering underneath it right now, that is capping this rally. If we can get a sustained trade above it, it also takes out this downward sloping resistance line, another bullish indication. Like, think about that. If we can get above, let alone settle above these downward sloping resistance lines, keeping the downward trend intact, that would be very, very bullish. It'd be hard to be a bear when you do something like that. Not that the market won't turn on a dime, but I think what you're going to see is more and more volatility, where you're going to start to see higher move highs and higher move lows, and the sideways that you encounter is just going to be dealing with certain short-term extremes. So let's see what else. The key level is definitely, once again, to watch is this 105.75. Above that, we're going to be pressing 106.12 and then 106.5. Like I said earlier, to 107.30, probably going to be very hard to reach. Now, if you're bearish, like just because I have this bullish signal, and you want to say, let's fade Teddy and Forex Trading Unlocked and just go the other way, well, then if you're going to do that, definitely make sure that you're short against this 106.12. Anything above that, I mean, forget this key pivot area. Anything above this swing high, if you're short, you're on the wrong side and you're going to get munched up. I think that especially this 105.75 area, this is a key level because it falls right into this downward sloping resistance band area of these two lines, as well as this little key pivot level right here. So selling it right against this, up to above 106.12, but that gives you a good ratio, because if the bear trend truly is intact, you're looking at one of the last great selling opportunities before you continue lower, bang out new lows, and then retrace back somewhere up to this area. And then who knows, maybe that'll be a different situation as far as changing from bull or bear to bullish. So the trend is your friend. We'll monitor this trade. We still have a little juice to the upside, and we'll see what goes on with it. And it's also key for us to get some understanding of what's going on with the other markets as well. So with that being said, I want to say thank you very much for your time. Always make sure to check us out at forex-trading-unlocked.com. Subscribe to our YouTube channel so you are notified of when we come out with other videos. And also remember to read the books available on Amazon.com in Kindle and paperback versions. Thank you very much. You have a great day.